Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Tuesday, September 9th, 2025. It is 4:03 p.m. Eastern Time, so the market's just closed. And I'll just do a quick market wrap. Going to be stepping out tomorrow. Things have been slow and will probably continue to be slow this week, although we could perk up tomorrow. I'll be around most of the day tomorrow. I'm just going to run out in the morning and knock off a few errands. So if I don't get anything out early, probably be back around 10:30ish, 11. But I wanted to talk on that. Just got a post out to you today. As I said yesterday, I would most likely be suspending. That's my personal preference, suspending stops on that QQQ short trade and just about anything that's close by, long or short, really, because of the volatility we may see tomorrow and or Thursday. So this is the economic calendar, again available on the site under click on resources. Go down to tools of the trade and you'll be able to find this there. And there's a big one right there, the PPI, Fed's preferred inflation gauge. And if anybody's trading crude right now, just you should always be aware the weekly inventories come out on Wednesday at 10:30 a.m. So we'll have PPI before the market opens tomorrow, followed up by CPI, which of course always has a potential to move the markets as well. And so that's it. So the markets have been as expected, grinding around last couple days, closed virtually flat today, slightly up, traded red, green, red, and that's what you're going to get when the market's awaiting a potentially significant market moving report. We'll see. This is QQQ, so made sure to, and as I mentioned yesterday, we're so close. There's the close today right there. You have to squint to see it. We closed about one tenth of 1% above the suggested stop. All these other intraday pierces, there were no closes. So that's why I made sure to get that out to you. As I said yesterday, in a flat market, that's close, and we're talking again 1/10 of 1%. So I'm going to keep that through tomorrow. Reinstate them on Thursday because that way we'll have PPI will be out of the way Thursday morning. So if the market wants to close, north of 580, then I'll reinstate it. Again, it's a suggested stop. You do you. I always, as I said before, the RR to T5 is better than 6 to 1. So you could easily use a wider stop, even double what that is based on the initial entry, and still have a very favorable RR. But again, let's see where things go tomorrow and the next day. Other than that, again, nothing new. A flattish day. Let me turn on the after-hour trades here. Include post-market. And you can see there we are in post market. We're at 580.19. That's about where we closed. Wanted to just update, the trade ideas. Like I said, they continue to be relatively light. I'm just not seeing a lot that's getting me excited out there. Nor is the market doing anything. The stock market, even QQQ. You can look at SPY. It's the same story. The momentum is waning. Go back to our 60-minute chart. You can see it here clearly. So we closed today, and we've been trading this whole week and into late last week. This area right here, all the way where we were back at the beginning of last month. So we've gone down a little, up a little, down a little, up a little, and we've gone exactly nowhere over the last month or so. So it's not as if market's going up, it's not going down, it's going sideways. And as such, you're going to get the long-term momentum indicators. You're seeing them stall out. That divergence continues to build. That's what divergence is. When the momentum starts to slow, these are momentum indicators. And as I mentioned, we're looking at getting close to seeing a potential bearish crossover on the weekly PPO. And usually, even during a strong uptrend like this, that was coming off a low. Remember, this was coming off a major low, big divergent low, and you still had a nice correction for about several months there once you got that big green hill and you got the bearish crossover. There was the next one, little smaller hill, still followed by, remember, these are weekly candles, about 3 weeks of corrective action. And then this one here, The top came, we went sideways, just like now we're moving in a little sideways range, then the drop came. So that's again one of the things, keeping me there, but also, keeping me in that QQQ short trade. But again, to reiterate for the gazillionth time, it's not an all-in or an aggressive position, and it's a position that's being hedged against with selective longs. I continue to maintain that until we have some really solid sell signals, until we take out some of the longer-term trend indicators, get below some of these key support levels I've been highlighting, it only makes sense to go long, the best-looking long setups. And in doing so, you'll vastly outperform the market. Again, I just showed you the stock market, both SPY and QQQ, especially the equal-weighted. If you want to really look at what the stock market's done, well, that's going to be your RSP, the equal-weighted S&P 500. If you're an individual stock picker. So what I'm doing is taking from where we closed today here on RSP, the equal-weighted, and so that was December or late November right there of 2024. So for nearly 1 year, the stock market, if you will, has gone absolutely nowhere. We had a hell of a down and one hell of an up to follow, and it's taken us back to where we were nearly a year ago right there. So that's the story of the stock market. So we will do a whole lot better and have been, again, avoiding the most bearish or going short the most bearish individual stocks and going long the most bullish. So let's look at that real quick and we'll wrap this. So on the site, let me go back here to trade ideas. So go to trade ideas. You can categorize those. You can look at all the longs, active trades, long and short. This is, as I always say, a small fraction of the trade ideas shared here. When I do videos, for example, if I cover a sector, be it the semiconductors, gold mining stocks, or any other sector, I will cover, lithium stocks. I'm going to cover dozens of trade ideas, the individual components, or sometimes I whip together these trade idea videos with eclectic mixes in stocks, in commodities, stocks, ETFs, in various sectors, and both long and short. And however, the ones that make it on the homepage, I call them official trade ideas, and you'll find those here. And so there's not a lot of updates to be made lately. And some of these, the way my tagging system works, if you've ever wondered, is when you go in here, if you click on, let's say, FMC, that's one of the ag input stocks. I started getting bullish on those stocks last year, and when I tag it, then I categorize that post. Those were all long trade ideas. Anyone in that video that I covered, in that case, they're all going to populate here. And so you're not going to have, on some of these, you might have some screenshots, meaning what I call static charts, where I take a screenshot, mark up the levels. But most of those are in the video. So in that one, let's just what I'd say, FMC. Somebody asked about them recently. I think they get most likely another leg up. Some are starting to look very bottomish, coming off divergent lows, and a lot of the other ones that we had. And when I've done these videos, I've done maybe a dozen videos on these since I got bullish. I listed which ones were my top picks and gave you targets on those, like NTR. We hit the fourth target. There's still T5, so they're still there. This one's pulled back to the 200-day moving averages, and so still looking at one more thrust up. There's one CF. We hit our first target there, came close to T2, but it's still in an uptrend. Remember, an uptrend simply defined as a stock making a series of higher lows and higher highs. Now, so what that one's doing, it's not on fire, but it's grinding up. And Mosaic, for example, a lot of these, we hit T3. I believe I mentioned at the time we had negative divergence. We had a nice correction, nice pullback, came back into the 200-day moving average. So these charts are still constructive. Now, I won't update these on a daily basis. Anyone still in these, let me know. So we hit 1, 2, 3, pretty quick run up to T3. I forget where exactly it was mentioned, many times since there, but that's about a 60% run up. Pulled back, as you can see, to split the crosshairs between the 200 exponential and the 200 simple, 200-day simple moving average. Also back to that T1. Remember, that's resistance once broken, as it was here. We overshot it, pulled back, becomes support. And so that's that. So those are still on there. This one already hit its final target, did so, and then put in a divergent high afterwards. That one would have been probably taken on a breakout of this downtrend line. Good for about a 56% gainer. All right, so you're going to see those in there. And again, it's not a perfect archiving or tagging system. So if you have any questions on any of these or they look stale, there might be some I haven't given an update. Let me give you an update on Etsy. I noticed Etsy's continued to have a constructive chart. I've been have a soft spot lately for these kind of, I wouldn't call Etsy a blue chip company, but it is an established online retailer. It has a unique niche. It's not going head to head with Amazon. Amazon has all your Chinese crap, cheap prices on whatever you want. Etsy's more handcrafted, individual artists. You can find unique gifts and finds on Etsy. So it's kind of like that, if you will, that kind of artsy Amazon, if you will. That's the way I look at it. And so, oh no, that's not the one. There was another one. Etsy already commented on. Yes, Etsy already hit our first target zone. As I mentioned, put it in divergent high. Got whacked down recently with the, I talked about the de minimis, the change in the de minimis rules, which they used to be able to, a lot of the sellers on Etsy were importing low price stuff in, which were exempt from tariffs. And so I believe that was that. Now, however, with that being said, that's going to hurt some of the sellers, cause them to have to raise prices, which also lowers demand. But it pulled back to that support level, and it still looks constructive. So I'm still going to leave that on there and maintain these targets for now, unless I see the market completely crap out. If the market holds up into this year, and that's the beauty of running a long short hedge portfolio. You can be wrong on your call on where the market's going and still make money. You just have to pick stocks with the constructive charts and sectors that look bullish, and avoid those that look bearish, or turn around and outright short them and profit from that. All right, so what else do we have here? Nat Gas. Oh, I still love very, very much like Nat Gas. That's still one of my favorites. I've been making that clear lately. That's the daily chart. Here's a 60-minute chart. Like I told you recently, we took out we're just above, we took out and we're above R2. So we still have from our, was highlighted here, there's our breakout. If my 6 and final targets hit, that's going to be about a 42% run there. So no change. And that's why I'm not updating it. I did update it, I think just yesterday, as recent as that. Novo, I am not. I told you guys that I had personally taken profits on the bulk of my position and may re-enter, but I'm just not feeling it yet. It was a nice exit. T4, as I told you, we had or T3, I'm sorry, had a very good chance of getting a reaction. Then we took out the trend line, and it's been drifting back. T1, I think will offer the most objective entry. We pretty much have pulled back to T2. So we were able to swing this one up. Again, there were multiple entries listed here that was long-term support, which isn't showing here on this daily chart. So depending on where you took it, we swung that up for about a 20+% profit, turned around, made clear that was a big resistance level, big old gap in here, and have been able to sidestep a give back of about 8-9%, a good part of it. And this is swing trading. And so I'll let you know, but right now I'm leaning towards, if I can get back to T1, I won't even go full back into it. It was a big position for me, but I may most likely add some back there. Again, depending on what the market does. We have a lot of stuff on the economic calendar this week, and this guy wouldn't surprise me at all if it wants to retest that low. That's long-term support there. Come back in and retest the recent lows right there. And so I'm very much open to that. And again, I just wanted to update it for those of you that have been in or are still in this trade. What else do we have for you? Lulu's the one. Lulu had a constructive chart reported, and it crapped out today, or last couple of days on earnings. Had earnings, big drop. But I'm going to tell you, depending on if you're in this, not in it, if you've been watching, I think it still has a very constructive chart. Better now because we're at long-term support. This is my weekly chart on Lulu. You can see my volume price histogram bars. You can see support levels. There's a level I've had here, 165. I believe I covered it in previous videos. There's a previous major reaction high. We broke out, successfully back tested it there. That was COVID. That was an intra-week candle, rally back, right back on it. That's a successful defense of that support. And this is the first drop to that level. So again, this is a brand name, big, huge leader in the industry. Lululemon. If you're a woman, they make guy stuff too now, I believe. But if you're a woman and you're into working out or jogging or just wearing the clothes that look good, you know who Lululemon is, and they've had their problems. But again, now wouldn't surprise me to see it come and visit this long-term uptrend line, and if so, then it has more downside. I'm just pointing out for you right here, we have positive divergence there on the weekly chart. If it can reverse this little, looks like a breach there, will change. This chart's still forming right now, the weekly chart, so you have the potential to reverse off that long-term support there, and there's the divergence, gets even bigger on the daily, and a big old gap to backfill. So now earnings out of the way. This and see these bars here. That looks like a potential selling climax. A big surge in volume after a prolonged downtrend. You get that last puke out, we call it, where the last of the weekend longs just puke up their shares and capitulate, and that's what we call a selling climax. And so there's some potential in that one, and that's why I wanted to highlight it. Already covered a lot of these. I've been covering the grains. Still like the grains. Still constructive charts. No changes there. Wheat, corn, soybeans, copper. I've covered that one. Covered again. It's still a long trade. It's been consolidating around that first target and needs to pop it, which I believe it will, and then go up to hit T2, and then we'll exit that one. We bought it right there, right off the lows, so it'll give us about a 7%. Nothing big, but it's just taken a while to do anything. Lit effectively hit, but I didn't put it out there. We came very close. Lit is lithium ETF, LIT, to my fifth target. I gave you in the last couple. I highlight it way back here, and it's a breakout, and then we bought it on a breakout right here in late June above this trend line. That was our buy signal. And recently I added additional price targets for you, and we've effectively hit T5. When I say effectively, remember, you always sell a little below the actual resistance level you're targeting, and you can see that one came in within spitting distance. And how low you sell below is relative to how volatile it is, how big the moves are. So far, it's about a 37% rally, but we'll there's a big old gap down here. If it wants to backfill, that would be an objective re-entry. T3 right here, that was when T3 was hit it again, then we gapped above it, hit T4, and again, we, for all intents and purposes, hit T5 yesterday, or close enough, but there's that one. Next up, that's it. And I think that's all that needs updating. ACN, let's see, ACN, we have that one is also a long, and already hit perfect tag of my first target. I think we bought it right there off the lows. Hit the first target, had a pullback, which was expected. First target, initial hit, reaction, and we need to pop these levels here, and then that could take us up there. Short trades, trade ideas, active trade shorts. Might have to update some of these, might be stale. QQQ, as I told you, started out with, suspended that stop because we were just a hair above it, and certainly a 1/10% isn't enough to let them take my shares, especially the action coming late in the day. It looked like just a little ramp to blow out some stops. What do we have? There's a bunch on here, kind of a mixed bag. Oh yeah, the grains. I mean, not the grains, the cows. I still like feeder and live cattle shorts. Mentioned to you starting back a couple weeks ago. This is LE, and LE is live cattle. We're at the uptrend line. This is the daily chart. I gave you this wedge a couple weeks ago right here on the 60-minute chart. Now we're looking at a 1 year with 2-hour candles, and we have now hit that uptrend line. I still think there's these guys have a lot more downside to come. And GF, my feeder cattle, also shared that one with you on a note. That's GC. GF, there it is. We've now hit T1. Oh wow, look at that. Earlier today I was checking it. We're right on T1, so that's hit. And this one was shared for you futures traders. If you're new to the site, as I mentioned, there used to be an ETF or ETN technically that held cattle futures, live cattle, feeder cattle, and it might even have held lean hogs. I'm not sure it was COW, but they retired that one. So, to the best of my knowledge, you don't have any way to directly trade this. And I highlighted here and here for you. We had a couple sell signals. So we're good for, what is that? It's nothing big. I'm trying to see the drop there. About 5%, 5% so far. And the way it works, T1, which is we parked on today, is nice support. Once that breaks, it opens the door to T2. Right here, you have price and intersecting uptrend line support. And based on the long-term charts, this just doesn't show it here, but cattle prices have gone just nearly parabolic. And so when that happens, just like the orange juice futures we shorted last year, and we've done coffee in the past, same kind of things. These agricultural commodities sometimes just get away from themselves, and it's a kind of a momentum trade. Momentum traders pile in, shorts get in too early, they get blown out. It just causes this like crazy runaway move, and it's unsustainable in certain commodities, especially when there's a replacement. I mean, hey, who doesn't love a good steak? But when you go in there and you're looking at porterhouses and T-bones, approaching $20 a pound or whatever that, you just might go buy the chicken breast or a nice good pork chop that day. So that's that's what happens. And then of course the other thing that happens is whether there were problems with the cattle, hoof and mouth disease or whatever else is going on, or tariff things, those things abate and they clear. Prices are high, so what happens? They start double pumping the calves out there. Just they're gonna just start bringing them in from Canada or wherever they're gonna do it. Supply market forces. When prices are that high, I know it happened with cocoa last. Cocoa went crazy a couple years ago, through the roof. Most cocoa production has historically, and still to this day, comes out of Africa. But Brazil is planting massive amounts of cocoa. And so it's going to correct that imbalance where, they had some yield crop problems over there, killing some of the crops. And of course, land being used up and over farm, what do they call it? Not rotating the crops and all that stuff. So then, boom, what's going to happen? Just have to have a nice temperate, a tropical similar climate. And so that's what's happened there. So it'll happen here too. Markets always correct themselves, especially if there's an alternative somewhere, which there usually is. In the shorts, and again, you're going to see Novo here. Novo was a long. I already covered that because in this last one of the posts I gave you, I highlighted as a paired trade with Lilly. Go long Novo, which we did, and short Lilly. They are neck to neck. They're the two big competitors of the GLP-1 drugs, those weight loss drugs that were game changers. And so we did really nice on Lilly, sidestepped the give back. And then, Novo, long. And then Lilly, we already closed out. It was it was an after hours, somewhere in here we shorted it. We hit my first target. We bounced as expected. I highlighted it recently as a re-entry here up to, but really not. This is that re-entry zone, the shorting zone right here. And we're still in that zone. And I still maintain these deeper targets down here. Lilly is a stock to me that looks like it peaked. That's subjective. That's one's interpretation. What one cannot argue, by definition, this stock is in a downtrend and has been since the middle of last year. And it's also below its 200-day moving averages. And that downtrend started after a big divergent high with nice sell signal. And so this is it. So we hit first target, cover, go long, play the bounce, whatever you want. And somewhere up to, but not above that yellow zone, that reshorting zone. It will likely reverse. And if it doesn't, then you stop out if it goes much above that. All right. Well, the CCL. I haven't talked on that one in a while. Threw that out to you. I had a couple inquiries since. It's not going up. It's not going. It's not going down. It's not going up. It's about where we shorted it, give or take. And I still the chart. Nothing has changed. This chart still looks the same way. So the technical case, in fact, all this is a breakdown of the primary uptrend line with a big divergent high. Back test one, back test two. And this one needs to take out that 2861 level to get going. I don't know where my targets went on it. Did I have it on a different board? No. Okay, I must have just drawn arrow breaks there. So any or all of those are potential targets, all these lines on this chart. That's it. I still very much like stocks. I still like the restaurant and hospitality sector, PEJ, SOXX. Let's look at those two. SOXX, of course, are your semis. When NVIDIA dies for good, they will die. Big divergent high. Again, just like we had a divergent high there, divergent high. And I've given you targets on this. Sorry, a little snafu there. Yeah, divergent high, trend line break there. We don't have the same kind of wedge there. We had a very steep wedge. It broke. We're moving sideways, but pretty much just like the market, it's been wobbling lately. You need to take out that recent trading range. And then that was our last trade right there. And for some reason, it seems like the newer, where are those targets? Oh, there it is. There's your new. So yeah, no update, guys. I gave you this one back here on the break there. Told you we need to clearly take out the S1, meaning first support zone. That's what S1 means. Zone is when there's not a hard, well-defined level. Like T1 is a specific, precise level. This is a zone. We had two intraday breaks there, and that's it. So same story. We've been moving around, slopping around, slogging around sideways, just like the stock market. And unless we clearly break S1, and when we do, opens the door to my first target. Once that goes, T2 will be hit, most likely along with the 200-day moving averages, and then these longer-term targets. The other one, PEJ, leisure and entertainment, very much like this one. The numbers are coming in today, more downward revisions to the job numbers by nearly 1 million jobs over the last, I think that goes back like, I don't know, it was less than a year. But just like I told you, they've been imputing a lot of data and when the trend is going in one direction, in other words, the job market, unemployment rate's been falling for years since COVID, that will tend to skew those numbers and give you the readings in that direction. And now we're seeing the revisions coming in, and it's showing. And that's why these recessions, that's why bear markets, once the masses realize things have turned, it's just a 1-2 punch from the market, because then the data starts getting revised in hindsight, and half the time, or more than half the time, the NBER is going to come in and tell you we're in a recession long after it started, or after it's already started, because they're going to revise a lot of the economic data gets revised. I'm trying to see if we have a little trend line there. So PEJ looks very nice, continues to set up here. First, second, third, fourth target. And then the sister trade I gave you on that was EATS, EATZ. We shorted that one back here. We hit our first, second, third, almost T4, as you recall. If you were here, posted that day on the morning of August 7th, covering all shorts, going to a full long position. So any trades that had additional targets were truncated at that point for that reason, stated at the time reasons. And so it's really a continuation of that trade, from where it broke down, just like the stock market's made a marginal new high and it's starting to move lower. This one's been flirting with its 200-day moving averages for the last month or so here. And once it takes out, that was T1 all the way back there, still is support. If it was support back then and resistance there on the bounce back, it's still support. So once that goes, that's going to open the door to these additional targets there. That's about it. If there's any I missed that you want to cover, TOST was a short. We shorted here. Still going on. We hit our first target, bounced as expected, right back to that resistance, about 45.20. We have now taken out T1, but we hit these beautiful 200-day moving averages. The markets, stocks, they love that 200. So we need to take that out. When you're in an uptrend, buyers will buy those. However, once they go and go with conviction, this was a quick 1-2 day dip below. Again, for all the reasons stated at the time, it was not an opportunity to short. Back then, we didn't have, this wasn't a trade back then, but a time to cover all shorts and go long. And so that's why that was a false breakdown there. A lot of stocks whipped down below the 200s, again, for the reasons cited, and rallied from there. So that was, again, brief. Last couple times they bought it, even once it recovered there, you can see the stock rallied up to new highs. And so again, that's an important level. These recent lows, take out the 200s, you're going to hit my second target. Then you'll most likely eventually bounce there, most likely, and then take out the trend line, go down to T3 and T4. So plenty of meat left on that bone. All right, guys, I'm going to wrap it up here again. Let's see what happens tomorrow with PPI, and then the next day on Thursday with CPI. And then we'll have the Fed meeting next week. A lot of times the market goes into the holding pattern before then. But again, that's the two biggest concerns by far. Earnings don't even matter right now to the stock market. They want their juice, the easy money. They want that rate cut, and they want more to follow. And Powell by nature is a dove. Don't make no mistake about it. He's a dove by nature. So he wants to cut. But if these inflation numbers come in hotter than expected, it's not saying he's not going to give us a 25 basis point cut at the next meeting, but it may change the dot plot or the expected trajectory. So let's just wait and see how the next couple days shape out. Where I'm getting at, we could have a nice rally into next week. Market could punch on into new highs, or it could go the other way. Depends how these numbers come in, and more importantly, guys, really is how the market reacts to them. So, like I said, kind of taking it light, being a little liberal on stops on both longs or shorts right now, and seeing how these two numbers come in the next couple days, and then we'll go from there, and I'll decide. Like I said, I'll reinstate the stop on QQQ most likely, and anything else that's close by. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.